Okay, we are going to go ahead and get started here. For those of you that don't know, my name is Adam Golden. I really appreciate you guys carving out time to attend Symposia this year with us. This is our second class. We are extremely excited to build on the momentum we had with our first class. This is our first session, and we are going to be turning things over to Mike Fryt here in just a minute. By way of introduction, Mike is the former VP of Tax of FedEx Corporation. He had responsibility for global tax affairs for the company until his retirement there. I can speak specifically to Mike's ability to put in a succession plan that I know FedEx has used on 2 occasions with early retirements and things like that, as FedEx is a client of mine here at the firm. So, Mike certainly has a wealth of experience on that front. Prior to, in fact, the current head of tax was one of the successors that Mike developed into that role. Prior to FedEx, Mike was the senior tax counsel at TRW Inc. In Cleveland, Ohio. He had all of U.S. and international tax, legal planning, compliance, and accounting matters. And then even before that, he had roles at Exxon, which then became ExxonMobil. He did expat assignments in Sydney, Australia, Brussels, Belgium. Mike has a wealth of experience, has both an accounting degree from the University of Colorado as well as a JD from there, so well-rounded on both sides of the fence. So we're very, very fortunate to have Mike be a repeat contributor here to Symposia. He did session 1 and session 2 last year. We were fortunate enough that he was willing to do the same again for us this year. So we have Mike for this session as well as the next one. So as you guys have questions, you do have a chat functionality. I'm going to send a quick chat so that everyone can see it. Test chat is coming over. You can chat me specific questions you have. We also have the microphones open. So if you have questions you'd like to verbalize to Mike throughout the presentation, I would highly encourage you guys to do that. One of the major, you guys have probably heard this as you talk to your relationship managers, but one of the major feedbacks we received from session 1 or from Symposia 1 rather, is that we'd like for there to be more engagement for each of the sessions. So I would encourage you guys to don't pull punches, don't hold back on questions. Myself, Mike, and then we've got some other folks here within our organization are happy to answer any questions you guys have. We will also have a Q&A at the end. So we'll have a Q&A to go over the session itself. And then at the very end, we'll open up Q&A for kind of anything you guys want to go over that may not relate to the session itself, maybe tangentially is related to it as well. So there'll be plenty of time for you guys to interact with Mike and the rest of the group here. And with that, Mike, the floor is all yours.
Okay, great. Adam, thank you very much for that. I appreciate that. And welcome to those of you listening into this webinar today. I do hope you find it to be of value. Couple of things before we start. First, I know some of you on this webinar, and I know your personalities, and I suspect those of you who I don't know, your personalities are similar, namely that you all are not shy about calling out matters with which you disagree. So if you do disagree with something I say or someone else says or have a different perspective on it, by all means, share that so that we can all benefit from that type of interaction. And I would also recommend, based on what we saw last year in all of these kinds of, in the symposia, get to know your fellow classmates here if you can. There's some valuable relationships that you can develop here, and education that each of you, information, can pass on to each other. So if you can, try and do that as much as you can. I'm having a little bit of trouble here with my connection. I should mention that I am in a position, I'm in a location that has spotty connections, connectability. It's Wi-Fi only, and it's spotty at best, similar with the telephone connection. So if we do get bumped, this is why I'm not on video, by the way. If we do get bumped, I will just call back in. I don't want to disrupt things, but I want to add that I'm your ally. okay, I have a pretty good idea of where you all are. I mean, this is a high-flying group, no question about that. Um, and I know that each of you have, 1,000 people pulling on you from all different directions, and you have a lot of stress, which sometimes you think you just can't handle. Um, I know that. So just hang in there. It is tough, but overall it is worth it, and or it will be worth it. And in the meantime, do yourselves a favor and do your families a favor and those around you a favor and try and enjoy the ride as much as you can. Because don't forget, you only get one of these kinds of rides. And where you people are at the higher echelons of large corporations is a good place to be. And there are some enjoyable aspects to it. So try and do that. Okay. Okay. So with that, let's get down to business. For you to be successful in your career, and I think most of you on this call are either number ones or number twos in the tax department. So I'm going to be talking about how you remain success, or how you be successful as a number one, or how you ascend to a number one position. To be successful in that endeavor, in those endeavors, you need to answer two fundamental questions that we are going to discuss today. And there will be other ancillary questions that come along with that. But the two fundamental questions, and back one slide there, Adam. The two fundamental questions are, what is it that is expected of you to be able to ascend to a number one tax position, or if you are already there, to be successful in that position? In other words, what are the critical success factors for that position? And in the process of answering that question, you need to identify the key stakeholders who will have a major influence on those critical success factors. And you need to determine the proper communications protocol with those stakeholders. The second fundamental question is you need to do a personal assessment to determine which of those critical success factors that you've identified for that position, which ones do you possess and which do you need to work on. So, all right, next slide then. Let's talk about your first task: defining, documenting, and aligning on the critical success factors for your position, or for that number one position. Okay, next slide. To do this, you need to identify your key stakeholders, as we were mentioning before. On this slide, I've identified a few of the typical key stakeholders for a number one tax position in a large company, such as those that you all are members of. I'm going to presume that all of you report to the CFO. Not always the case. Sometimes the number one position will report to the general counsel, but it's usually the CFO. And if that's the case, then the CFO ought to be a key stakeholder. If not, you have another issue, which is way beyond the scope of this session here, and you'd have to address that. But the CFO, he or she should be one of your key stakeholders. The CEO could be a key stakeholder of the number one tax position. And this we saw pretty much being the case in the last 3 or 4 years with tax reform being on the legislative agenda. I've interacted with a lot of number one tax people of Fortune 500 companies, particularly in the last 10 years, and particularly on tax reform. And I know that the CEOs of a lot of those companies were key stakeholders for the number one tax positions, over the last 3 or 4 years. Whether that's now remains the case after the passage of the bill last December, I don't know, but it can be the case. The general counsel is very often a key stakeholder of the number one tax person, and it could be someone from the board of directors, particularly the audit committee. This really came around in the early 2000s with the corporate scandals, the Enron, WorldCom, Global Crossing, and the advent of, or the passage of Sarbanes-Oxley, and the introduction or advent of the PCAOB, and all of the bad press that came along with all of that. And boards started taking notice of what their corporate tax departments were doing to an extent that we had never seen before. So members of the audit committee in particular started becoming key stakeholders of the number one tax position, of tax departments. Could be somebody from operations, and you all probably already have this. A lot of times an operating group or company will have a major objective that requires a big reorganization. And guess what? As you all know, generally, if there's a big reorganization going on, the tax department's right square in the middle of it. So they made the senior VP or an executive VP of an operating group or company may reach out to the tax director and say, hey, I need you to have this objective for this year or next year or whatever it is. Could be other functions as well, the controller's function or the treasury function or others that really require mandate direct tax involvement and value-added tax involvement in what they're doing. So once you've identified those key stakeholders, and it will vary from company to company, it could be, it could be 10 people, or it could be 5. You have to ask if they have their own specific objectives for you, or are they expecting you to come up with the objectives that they would like to see you to have. If they have their own specific objectives, are their objectives for you clear? And I'm talking about the number one tax position here. Do their objectives to their stakeholders include those that they have for you? And I'm going to mention that I'm going to give an anecdotal comment here because as Adam remarked earlier, some of the comments we got back last year was it would be nice if we provided real life examples of some of these things, anecdotes where we could without breaching confidentiality or what have you. So here's a situation where I do have a specific example. When I was, hello, am I still? Can you still hear me?
You're still good.
Okay,
you're still good.
I thought I got bumped up. When I was with FedEx, every year, like everybody, we would begin our business planning process for the next fiscal year early on, many months in advance of the new fiscal year. And in that process, with all of the operating companies and the functions doing their piece contributing their piece of the plan, as that developed, then the senior level executives started working on their objectives. And I reported to the CFO, and at some point in the year before our new fiscal year, my CFO would finalize his objectives. And he would have those objectives with the CEO because that's who he reported to. Once he got those, once they were finalized, he passed them on to all of his direct reports, including me. And I will tell you that there were times when we had, a big tax objective that we knew we were going to have, at least for our department, and it would be in his objectives with his CEO and with others, on the board. And that generally made me pretty comfortable because that meant that there's something very important to me and to my department that he was also aligned with and aligned all the way up to the CEO and to the board and so on and so forth. So that's generally a good thing if you see that, and it's a question to ask. You also have to ask if your stakeholders need to be educated on what the number one tax position is, what it's responsible for, what its objectives should be. I will tell you that certainly at FedEx, I did not have that issue very often. I mean, there were certainly times when we had even strained discussions with my key stakeholders about what ought to be in the tax department objectives. Sometimes the CFO would send an article down or something and say, hey, look, this company is doing that, or I'm seeing this in the press. Why aren't we doing it? Why can't we do something along these lines? And we'd look at it, and if it just did not fit our company profile and was not something we could do, then I would send something back to them and say that, and we'd discuss it and might go away. But those were the extent of my discussion. Others of you may have more difficult premises here because you may have CFOs who rotate in from other departments, don't have financial experience and expertise, and you may have to do a lot of educating with those people to just get them on the same page of what your objectives ought to look like. Okay, next slide, Adam.
Hey, Mike. Hey, Mike, can I ask a question?
Yeah. Yes, sir.
So this is Mark Staub.
Who is this? So identify yourself if you don't mind.
Sure. Mark Staub from the Comores Company. To your last bullet there on stakeholders needing to be educated. Do you have any suggestions or best practices in how you go about doing that. Being relatively new to a company and being in this position for the first time as far as heading the tax department, I have found it tough to get time with my stakeholders to educate them or show the value that I can bring. So just any best practices that you can share with us?
Yeah, that's an excellent question, Mark. And I tell you, it's really, this is where and we'll talk about this later on, some of your non-technical skills will have to come into play. You're going to have to sense that out, and you're going to have to sense how much your key stakeholders want to hear from you. And it's going to vary. If it's a member of the board, they're not going to want to hear from you a lot. If it's your CFO, they're probably going to want to hear from you a little bit more, or maybe a lot more. It depends on how engaged they are in your business, in the tax business. If it's somebody who is rotating into that position, he or she is not, in general, going to be as interested, in tax. And honestly, and I've spoken with people who have had that situation. And I even had it once in my career. I was number 2 at that time, but we had somebody who parachuted in from an operation, and they just really did not want problems out of tax. Okay. So they really didn't want to hear from us very much at all. However, at the same time, you need to let people know that you're adding value. Tax is not just racking and stacking and reporting numbers. Tax is adding value, and you need to let them know that. So it's a fine line to walk. And particularly if you're new, you have to kind of gauge when and where you do that. I mean, this is not a direct answer to your question, because I don't think there is a direct answer. I think it depends on the circumstances and the personalities that are involved. And some of that is communications protocol, which we're going to talk about as well. Now, I don't know if that helps at all, but it is difficult, and it depends on how much education they need and how much knowledge they have of what y'all do. That are all helpful? You want to add anything?
Yeah.
So go right ahead.
Mike, this is Don Mark at Dow. I've got just the opposite problem of what you described. How you doing? I have a gentleman that's parachuted in, and he's very active. He wants to understand all kinds of things, but he has no financial background or financial acumen to really put things into perspective. And so when you say you need to educate your stakeholders, we spend a ton of time educating our CFO and answering and chasing down all sorts of questions that you normally would not address from a CFO.
Yeah, that's tough too, because you can waste a lot of time doing that. And I mean, waste not only your time, but the organization's time. And somehow, I don't know. I mean, I presume if this person came in from a non-financial background, is it a he or a she?
It's a gentleman. He has investor relations as his background.
Okay. Yeah. Do you think it's a short-term kind of assignment, or do you think it could be long-term, or do you know?
No, this will be a long-term assignment. He'll be around for a while.
Okay. Well, you're going to have to develop a relationship with them, and somehow, at some point, you're going to have to get to the point where you say, "Hey, look, I appreciate your questions and all of that, but we've either covered this territory before, or this just doesn't fit for us, and you're going to have to trust our judgment on some of these things. So maybe I can cut to the chase a little earlier in our communications, and if he does trust you by then maybe you can short circuit some of those discussions, so you don't have to waste as much of the department's time. Waste may not be the right word. Use as much of the department's time on that sort of stuff. I mean, what you need to get to is somehow convincing him that you guys know what you're doing, and you're going to answer his questions because he's your boss. You have to do that. But if it's just something that's really out of the ballpark, you're not going to spend a lot of time, and he's going to have to trust you that your shorter responses that it's not something that you all want to follow up on. It ought to be in his best interest too, because he wants a department that's adding value. I mean, that's ultimately, you got to get to that point. You got to say, hey, look, you not helping us add value. And if we add more value, that's to your benefit too. And so let us do the work that we need to do, or give us more people.
Well,
Mike,
I think the key issue is trust. Anyway, go ahead, sorry.
Yeah, Don, this is Tony. I've seen this before where non-financial people have put in CFO roles for my clients. There's two ways of looking at it, the glass half empty or half full. You will develop this person, you will develop their mindset towards tax and over time, and you can come in on the ground floor of doing that, and you will build a phenomenal trust component to this. I think you got it at the end, that's what it's all about. And as Mike said, it will take more of your time, more of investment, and there is a point at which sometimes you'll have to say, in a polite way, redirect this and deflect it back. But take this as a golden opportunity, and it's been my experience, as my heads of tax that have really worked and helped develop the rapport with these CFOs and rounded them out, because they're coming in with one less aspect from a skill set than they really need to be in that role, and you're helping fill that in for them. They will forever be indebted to you. I think Adam and I spoke to one CFO, and the head of tax is retiring, and I believe that the head of tax probably educated this CFO quite aggressively throughout his career. And in fact, he made the comment to Adam and I about that on the call. Our biggest challenge is finding somebody to replace this guy, because this guy holds him in such high regard. So, think about that from the other side of the coin. You've got a great opportunity here. At the same time, it might take you a little extra effort.
Yeah, Tony, that really is a great comment. And, because, and I'll just add one last thing to that before we move on. That a lot of tax directors have the opposite problem. They don't see their CFO enough. And, the CFO may prefer to, depending on where he or she had his or her background, may prefer the accounting function or the treasury function. And the tax person may not see the CFO enough. Here, you may be able to see the CFO more, and because of that, have let's say a leg up on some of the other direct reports that you are kind of competing with. That's a great point.
Sorry, this is Rich Weicker from Caterpillar. Sorry to belabor this point, but because I know, Mike, I think you're about to move on. But if I could ask, on this topic of education, do you have a view on maybe what the most common perspective is that people come to tax with when they're outside of tax? Like you mentioned, rack 'em and stack 'em. Like, is it more that people view the tax function when they're coming to it as an outsider as a computational type thing or a return preparation? Because I think probably what I'm guessing most of us have run across is that we get perspectives from people outside of tax that are very, in our view, right, narrow as to what we really do and kind of the blended nature of the responsibilities that people have. Is it most common that people think we're tallying up amounts on a return? Or are there other, like when you think about like legal or other function outside of tax, are there other perspectives that people tend to bring to it that we should be thinking about addressing more proactively or have more in mind as maybe what common expectations are around what tax does from an outsider's perspective?
Yeah, that's a really good question. And I'll tell you, Richard, I think Richard, right?
I go by Rich, but Richard's certainly fine.
Okay. Hey, Rich.
Thanks. Yeah.
Okay. So I think, and this is just Mike Fryt's perspective, okay, and others may want to chime in here. I think the view of tax departments has changed over time. I'll tell you, back in the 80s and 90s, it really was. Certainly in the 80s, I think it was more a perspective of racking them and stacking them. You just add up the numbers and file tax returns, a whole bunch of tax returns, and hopefully keep the company out of trouble. In the 90s, I really think a lot of that, particularly in the late 90s, changed where they saw tax as a value adder potential for the company, because there were a lot of, tax shelters were very prominent back then, and a lot of companies were engaging in them. And I think CFOs in particular were being told by law firms and accounting firms, you guys need to be more aggressive with this. So I think that happened. But then came the 2000s, and I sort of drag you through this history. But then I think as a result of what happened in the early 2000s, and then with Sarbanes-Oxley and some of the penalties that were incorporated in that legislation, I think they were much more terrified of what tax could be doing in companies, and much more questioning, especially and at the board levels as well. And I think some of that still exists today. Now, my sense is that as a result of tax reform here in the last 2, 3, 4 years, I think most of you have benefited pretty handsomely from tax reform. And I do think that CFOs, CEOs, boards, shareholders are looking at you with a different view than they used to. And maybe, these people actually can add a lot of value. I mean, you're adding a whole lot of value right now to the bottom line as a result of what just happened. That's my sense. I don't know that for a fact, but that's my sense. I mean, and it will change, by the way, Rich. I mean, it would be different. I think if you have a stakeholder that's on the audit committee, that person will have a risk awareness type of perspective of the tax department. What kind of risk is the tax department generating? Whereas the CFO might be wanting to push the envelope a little bit and, all right, what can the tax department do for me? The general counsel may be more risk averse as well. Does that make sense?
Got it. Oh yeah, no, thanks. Very helpful. Yeah, thank you.
Yeah, this is Tony again. Just a real quick point on that. When I'm dealing with CFOs, CEOs, treasurers, general counsel, there's usually these stakeholders involved in a number one search. What I'm trying to do is figure out, as Mike succinctly put it, whether they fall on the risk mitigation side or the shareholder value creation side. They always have a leaning one way or the other. Internally in your own organization, that's what you should be trying to do, Rich. Figure out from these outsiders out of tax which one of those two camps they fall into. Not that hard to do by asking certain questions, getting their perspective. And once you know that, you angle your presentations to them always with a slant towards either risk mitigation as the lead-in or shareholder value as the lead-in, and you always balance the other one against it, of course, but you lead with one or the other. Hopefully that helps you.
Tony, this is Kelly from SWM International. I just wanted to add to that point. So the way I usually approach it with CFOs today or corporate controllers, CEOs really is a blend and a balance between what can we add as value and what is our role as it relates to and how much of our resources do we need to layer into risk mitigation or control. So in any presentation that I bring to the CFO, it really is, I'm hitting both of those angles. So what are we generating from a value perspective and where are resources needed on controls and in order to keep those sound financial. And then as it relates to, education, I think where we find ourselves today, everybody has got to educate their shareholders, their audit committee, their CFOs, given the U.S. reform. So depending on, your company's complexity, structure, I think we're all going to be needed to be educators if we want to be effective in our role and have the right resources to be able to manage going forward.
Yeah, great.
Could not agree more, Kelly.
Yeah. Thank you.
Okay, why don't we move on? Adam, next slide, key metrics, I think, is right.
Hold on just a second. There we go.
Oh, I'm sorry. No. You're right. We're okay. So we're talking about now. We were talking about who the key stakeholders are and whether you have to educate them and all. Now that you've identified the key stakeholders, whoever those might be, you need to identify your objectives. And my suggestion here is your objectives and metric, and this is a very urgent suggestion, your objectives and metrics of success or failure should be as specific and as clear as possible. Remember, everybody, that these will define your performance and therefore your success or failure in your jobs and in your career. So it behooves you to make them as specific and clear as possible. It's harder the higher up in the organization you go. Obviously, the objectives are going to be broader than they were when you were an entry-level tax person that came into the department. But you still need to move as far to the specificity and clarity as you possibly can. Also, as you're doing this, identify roles and responsibilities for gray areas that might cross departmental lines. And you all know those exist. Examples I have here, VATs, payroll taxes, local foreign filings. might be the primary responsibility of a local or foreign accounting group, all right, or somebody else, but with tax oversight. And if you have those situations, you need to ensure what it is that is expected of tax and of the number one tax person, and how you can get control of whatever it is that's expected. Give you an example here. I was in my position at FedEx for about a month, and my boss called me one day, the CFO, and he says, "We have a payroll tax issue, and I need you to get this thing fixed." And he says, before you even say anything, I know that payroll tax doesn't report up to you. It reports into the payroll group, which reports into the accounting group. But I'm telling you, Fryt, that if it has the word tax in it, I'm holding you responsible. I said, okay, I got it. I'm glad you made that very clear to me. As soon as we hung up, my first call was to our chief accounting officer. And I said, here's what my CFO just said. Hopefully he said the same thing to you or will. And we need to be on the same page when you staff these functions and how they're organized, et cetera, because I need, since I'm responsible for it, I and my department are going to need a lot of input into how those things are organized. And the same thing applied overseas. You know, we operated in over 200 countries, but we could not have a tax person on the ground in every one of those countries. You still had filings, local income tax filings, VATs, et cetera. We would rely on external providers like PwC or EY or whatever, but you still oftentimes need people on the ground to manage that process. And so we relied generally on the accounting people because they had to have people keeping the books in those countries. Anyway, just be aware of it. And if you are responsible for those areas, make sure you insert yourself enough so that you have the requisite control to, you know, be able to manage your own outcome on those in those areas. Now, ensure clarity of communications protocol. You know, we talked about this earlier with your stakeholders. You have to establish the right communications protocol with your stakeholders, and it will be different from stakeholder to stakeholder, and it will be different in the modes of communication. You know, for example, some may prefer meetings, some may prefer telephone calls, some may prefer just emails, or they may not want to hear from you at all. You know, they just don't want to have any surprises. I had both. When I was with TRW, I was one of the number twos, and I know that when we had a serious issue come up in my group, he preferred that I would walk down to his office and close the door and we talk about it. When I went to FedEx, it was very different. My CFO, and it became very clear to me after the first or second time I tried doing that, he did not want that. He did not like meetings. He thought they were an opportunity to waste time. And by the way, I came around to his way of thinking over the 20 years I spent there. He preferred that I put things in email. He also thought that it made us think things out before, you know, just trooping up to his office and dropping something on his desk. And it does. I mean, emails do kind of force you to do that. Now, that said, you have to have exceptions to those rules. Obviously, if we were in, you know, a litigation matter or something that could taint the attorney-client privilege, blah, 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 you have exceptions to those rules. But the point is that there were I had two different bosses and two very different preferences that they had on how I communicated with them. In terms of communicating with the board, you know, in my case, I actually did at one time have a board member who was a key stakeholder, but I never communicated with that person directly unless I had cleared it with the CFO first. And then it was usually by email, sometimes by telephone. You know, and it'll differ again with other people. I hope it's not texting. Texting, you know, is just a horrible way to do business, in my opinion. But you're going to have to determine for each of your stakeholders what the best communications protocol is, and try in those cases to comply with their preferences. Remember, these stakeholders are generally higher level than you are. They have more leverage than you do, and they can have a lot more influence on your career. So try and comply with their preferences. I mean, there are lots of ways of communicating, and if they like something else, then you know, try to work over to that avenue of communication as opposed to what you might want to do. All right, so let's move on, Adam. Next slide. Your key metrics, once you've identified your key stakeholders and once you've identified how you need to communicate with them, you're going to have to ultimately come down to key metrics, or the number one position is going to have key metrics. I'm not going to go through all of these on this slide in detail. I just put some that are pretty typical based on my communications with tax people at Fortune 500 companies. And I'd be very surprised if all of you don't have some of these on your list of objectives. But the ETR clearly, is pretty typical. Cash taxes are pretty typical. Risk tolerance, I'll come back to that. Provision due dates, we're seeing that certainly over the last 15, 20 years, I think. It used to be that the accounting function would also just rack and stack, and they would report out to the street on date certain. But as you all know, that date certain has been pushed back and continues to be pushed back today. And since the accounting function relies heavily on the tax function to get their numbers out, particularly at the very end, oftentimes the chief accounting officer may come and say, hey, look, we're going to move our reporting days up by a day or two, and we're going to need you guys to do the same thing. So if it's going to be a problem, maybe you ought to put that in as a specific objective of yours. Same thing with timely or early tax return filings. It used to be when I, back in the days of the covered wagon, when I came into the tax department at Exxon, we never tried to file our tax returns early. We wanted to file them on time. But, when I left FedEx a couple of years ago, we were prepared to file our returns, our federal return, 2 months in advance. I mean, and there were lots of reasons for that. There may be an objective on penalties, such as don't have any. Budgets, usually you have budget objectives, headcount, same thing, employee satisfaction targets. And as I mentioned earlier in this presentation, you may have operating company or operating group or other function objectives that you get from the treasury or controllers or whatever. Let's go back to risk tolerance here for a second. My point is that, and this was certainly a lot more, I think, typical back in the early 2000s, even through 2010 or so, because of what happened with Enron, et cetera, and all the bad publicity that came with it, and the legislation, Sarbanes-Oxley and PCAOB, and the greater risk to CFOs, CEOs, who now, CEOs never had to sign off on a company's financials. Now they do. Board members, particularly with the audit committee. So risk tolerance became an objective for a lot of tax departments in the early 2000s. I think that has kind of gone away. Maybe some of you, if you feel comfortable talking about it, could mention if you have one or don't have one. But this is one of those that's difficult to specify. And, it's difficult to clearly state what that objective is. But back to what I said earlier, it behooves you to state it as clearly and as specifically as you can if you have this kind of risk tolerance type of objective. So does anybody have a comment on that? Or if not, we can move on. And I know it might be uncomfortable commenting on this kind of thing if you have it.
Mike, I have a question.
Okay,
I actually have a question that was texted in. You were talking about text message, got me thinking of that. Chatted in. It said, do you have any suggestions to realign expectations on metrics when you start out on the same page as your key stakeholders, but when it comes time for evaluation, the target is moved? The whole time you've had agreed upon metrics as your benchmark, but then something's happened and your stakeholders' metrics changed, but you weren't aware of it or it wasn't clearly communicated.
Yeah, that's, my boss and I used to talk, my CFO and I used to talk all the time. And I mean, we didn't have formal meetings. I mean, a lot of times, we just go to lunch or something like that, and we talk about various things there. So it wasn't, I have to say, I don't think I ever had a situation where the objective changed without me knowing about it. If it changes without you knowing about it, that's a pretty serious problem, especially if it's in a number one tax person's objectives, that means you only have 5 or 6 of those probably. That's pretty important. Every one of those is pretty important to you. And if they're changing, especially without your knowledge, wow, that's an issue. And I don't know, maybe Tony has a suggestion. I guess my suggestion would be, first of all, if you find out about it at the end of the year and that target is moved, somehow you have to diplomatically point that out and say that wasn't our objective, and I didn't know it had changed. Should I have known? But I didn't, and so we were aiming for this target. We should, because don't forget, by the way, it's not just you; it's your department. It's all your people who have these objectives as well, and you have to stand up for those people as well. And this kind of stuff really should not. I just don't think should be allowed to happen. But I mean, I understand how it could happen. I just think it's a difficult situation. What you need to do, my suggestion would be, have enough communication with those stakeholders so that doesn't happen. And if you see it happening, then bring it up and say, hey, by the way, is this changing? And if it is, then we need to adjust our behavior as well. Tony, you have any suggestions on that point? Or does anybody else?
Yeah, what I've seen that happen, it's usually the metrics changing from the number one to the number two person. The number two doesn't hear about it. The number one knows about it and hasn't articulated it clearly and passed it down to their second lieutenants, whether it's in tax reporting, whether it's in compliance or planning. I've seen that situation. And then I've seen the constant quarterly attempt at year end to adjust and get the numbers down, where maybe there was a target at a certain ETR rate. And I have had certain clients that it seems like it's always a fire drill in that last quarter to all of a sudden figure out how do we get those numbers down or cash planning numbers up, one of those two areas. That I've seen, and unfortunately, probably more regularly than I would like to see. But part of it's just understanding that's part of that company's culture, that they will it will come down from the board or from the CEO or from the CFO that we need you to get us another point here, another point there. That if that's what the person's question was, that's not uncommon.
That's a good point. You're right.
What about in situations where new CFO comes in, or new, you have a change at your boss, and you're on a particular direction, and then I guess maybe it's more about adjusting expectations if there's new metrics or things like that on how much it's going to be able to be achievable in the time frame, before reviews come out or assessments of the department are done, things of that nature.
Yeah, I think that's right, Adam. I mean, I think if you have a new CFO and the targets are changed, then you have to have enough of a communication with that individual so that the evaluations of how you and your department do against the new targets understand or take into account the fact that they're very recent. I mean, communication is critical in situations like that. I think trust, over time would help alleviate some of those, but that's tough. And back to Tony's point, you're right, Tony. That's a good point. I'm aware of cases like that, and that's difficult. To some degree, it is the culture of the company, and when you go into it and you go into that position, you're going to have to understand that maybe those objectives are not set in concrete, whatever that is. If it's the ETR and you're expected to adjust it every quarter, then when you set that for the year, then understand that it may not be that may not be the ultimate objective. I don't know how else to address it.
Anybody have any other questions regarding those topics?
Tony, I have a point on that topic, and that's around the objective of that we're all kind of held to is no surprises, right? So, I think that's one of the biggest challenges is knowing ahead. I had a CFO who pretty much said, you only get credit if you tell me ahead what you're going to accomplish. And I think this is really kind of key to objectives, right? So knowing and planning and foreseeing how things are going to be impacted are key to being able to meet our objectives and determine metrics associated with those objectives. So these are some things that I think are, are absolutely a struggle for us, but also in our new world of U.S. reform can be, very challenging. But I think that's an area that I think we'll all struggle, and how we best manage expectations is, maybe for someone's input.
It's a great point. Was that Kelly?
Yes, Kelly.
Yep.
Yeah, and, Kelly, to that point, you're right about no surprises. Even good surprises can be bad surprises, and you want to stay away from that. And you're right; it is more challenging now with the passage of the tax reform, because there are so many big unanswered questions out there. But do the best you can to avoid any of them, good or bad. Certainly, bad surprises are even worse, but even good surprises can be very unsettling.
There was a young tax executive I helped develop his career early on. His name is Ahmed Rubey. Ahmed was a brilliant young guy. He's now retired. He ended up becoming a partner in TPG private equity, headed out of tax, became a CFO, helped sell Ariba software to SAP. Dynamic individual, but was a tax guy like all of you guys at one point in his career, very similar state he was in. And one thing he and I always talked about, and he took it to heart, was he always under-promised and over-delivered. He gave himself cushion, reasonable cushion. None of his objectives were average by any stretch. They were stretches, but he always had it in the bag. He always knew he was going to hit it and exceed it. And when setting expectations, that Kelly said, that's the one thing I will tell you he was a master at, and it took him to the lengths where, like I said, he's independently wealthy now, can do whatever he wants. And in fact, I will get him on one of our sessions this year. I promise you, I'll get Ahmed to jump in and speak about what he did and how he made his transitions and how he managed up expectations. He was a phenomenal person at doing that. Great lesson in that.
That's a great point. One caveat, and you're exactly right, Tony. It's much better to do it that way, but at the same time, like everything, at you guys' level, you're all involved in this at a level where there are not a lot of clear answers. But like everything, it's a fine line. You don't want to go too far so that you become known as a sandbagger, because then you start losing credibility, and you don't want to do that. So, as Tony said, you have to be really, an expert at as you said, under promising and over delivering, but not in the way that you're just seen as sandbagging.
Yep.
Okay, let's move on to the next. Sorry, go ahead.
Well, we can probably move on. I can ask a question separately. That's fine.
No, go ahead. Who is this?
This is Don Marr from Dow. I was just coming back to the risk tolerance point for a second. We're in the process of actually trying to nail that as a metric for my own department, and we're going down a path of trying to establish a risk matrix or a framework document around risk tolerance. I'd be curious to hear from other people if they're also following a similar path to address that point.
I'd be curious too. I mean, we had it one time at FedEx. We had a couple for a couple of years. I don't know if we do now, but yeah, I'd be curious if anybody's comfortable talking about it, whether any of the rest of you have something like that. If you do, and if you feel comfortable, maybe you want to just reach out to Dawn at some point personally by phone or email. Tony, does everybody have everyone else's phones and email contact information?
Yes, Adam and the team has put them into the forum section, so should be all contact information on there, including yours as well.
Okay. Well, this is one of the values of a symposium like this. Is there are 30 people or whatever, high-flying people in the tax world, and you might be able to establish some relationships among yourselves and discuss questions like that that you really don't want to discuss in a public forum. So, anyway.
You know what?
Okay, so sorry.
sorry. This is Kelly. One added point to the risk tolerance level. One thing to consider is your corporate controller, chief accounting officer, looking at what, you know, his position is, even if it's a comparable FAS 5 consideration, and also what's going to hit your financial. When are you going to be triggering something on your financial? And then kind of talk about, you know, what his tolerance is, and then, you know, and then kind of, you know, take that into where the cost benefit arena, you know, from a planning perspective, you know. So I would think that you would start with your peer, your corporate controller, chief accounting officer, because you're both having to take that analysis and determination as to whether something should hit the financial.
Good point. Same thing with the general counsel, by the way, or the legal department, depending on how you all are structured, you know. But yeah, it's a good point.
Thanks, Kelly. That's helpful.
You're welcome.
Okay, so we're falling behind a little bit. I'm going to speed this up just a bit. Onto personal assessment. You know, once you have the objectives, again, for this number one position, for those of you who are number one, we're going to talk about what do you need to do, and what do you need to assess in terms of what you have, and for those of you who are looking to ascend to the number one position, what do you need to do in order to have that skill set? So you need to conduct a self-audit in two areas against these objectives for that number one tax position, okay? The functional areas like compliance, audit, accounting, planning, regulatory, and legislative, and specialty areas, you know, income taxes with subsets for federal, state, and local, international, property taxes, excise, sales and use, international non-income taxes. Ask yourself, you know, which of these functional areas do you have experience in? Which do you, of the specialty areas do you have experience in? It's no surprise to any of you if I tell you that if you have functional experience in one functional area and experience in one specialty area, you're probably not as valuable or as attractive a candidate as a number two to ascend to the number one position as someone who has experience in almost all of those areas. And for most of you who are at your positions, I would suspect that you don't have just experience in one of the areas. But this is a question you have to ask yourself. So next slide. And assess not only your strengths and weaknesses in each of these areas, functional and specialty areas, but also what is important to your company. And I mentioned this, you know, for example, for oil and gas companies, Section 907, Internal Revenue Code, Section 907, pretty important for those companies. You know, Fogey 40 and the foreign tax credit baskets, et cetera. Pretty important. If you don't have any experience in that, in those areas, and you're looking to be a number one, that's a little bit of a little bit of a problem. Same thing if you're with a tech or pharma company. You know, if you don't have any experience in R&D credit, because it's so important for those companies. It's important for other companies as well, but it's really important for those types of companies. And on and on. So just ask, you know, what kind of company are you with, and what kind of specialty expertise will be expected of you to be able to rise to a number one level, or to be able to be successful at number one level. Also consider non-tax areas. You know, do you need accounting experience? Do you need treasury experience? There are companies, I was with one of them, which had, you know, very aggressive, let's say, treasury departments. And it was my second company, and our treasury department was out there pushing the envelope on new financing techniques and all other kinds of things all the time. And the tax department was always involved in those discussions, and we had to have a lot of expertise in what they were, you know, always pushing the envelope on. So you need to ask yourself that. Also ask yourself if your company requires or has it historically shown a preference for non-tax experience to be promotable into a number one tax position. I don't think this is too much the case anymore. It used to be more so way back 20 years ago. I don't know, Tony or Adam, if you have any comments on that. I just don't think it's a big issue today, but maybe some of you have that. I don't know.
I haven't seen it very much with my clients looking for someone that has non-tax experience in order to be promoted.
Okay.
You know,
I didn't think so.
The breadth of experience that you talked about, I think, is certainly something that's important. You know, I have a couple of clients right now where we're actually getting someone promoted into a number 1 role from a number 2 spot, and you know, Tony and I spend great lengths talking to the CFOs and to the outgoing head of tax that's, you know, getting ready to retire, or the person getting promoted, to make sure that they backfill their headcount with someone equally as strong as them. So companies tend to want to, you know, not hire someone as strong as the person they're promoting up for their backfill position. So someone not as strong in provision as the provision person that's getting promoted, or planning, or whatever. So then your new head of tax now is essentially doing a job and a half, right?
Yeah, you just hit on a point I was going to cover in a couple of slides there, Adam, but that is very important. You're exactly right. You want to backfill your position with somebody who is really qualified. You don't want to be doing both jobs if you're promoted into the next level. You also don't want to retire out of a job and know that you're leaving it in the hands of a monkey, you know? I mean, you want somebody who can do the job better than you can. You want somebody who is you or better than you, backfilling your position. Great point. Okay, why don't we move on to the next one? Sorry, go ahead.
One question that came in: strategies for a number 2 to get proficient enough. Sorry, I got tongue-tied there. In areas that are not its central expertise. So, you know, an attorney that needs rounding out in provision and accounting, or vice versa for the accountant on the planning aspects. Is there any strategies for that person sitting in that number 2 spot?
Yeah, first off, remember, and I'll mention this later too, you manage your careers. Nobody else is going to manage your career for you. If you need that kind of experience, if you know that it's going to be required to ascend to the next level, then you need to go out there and get it. You know, it's again one of these fine lines. You can't be pushing all the time to go to another position or whatever, but there are ways of inserting yourselves if you happen to be, you know, in a legal tax function and you know you need more accounting experience. There are ways of inserting yourselves into certain projects so you can get some of that experience, and at the same time let your boss know that eventually you would like to go over to one of those positions to round yourself better, and you have these discussions when you have career development type discussions as well. And if your boss is, if you're a valid number 2, it's something I think, that your boss would be interested in trying to help you do. At the same time, you have to continue to do your current job. I'm going to touch on that later as well. But yeah, seminars as well, or conferences can help a little bit. But if you have no tax, for example, just as an example, if you have no tax accounting experience, you're really going to need some to, I think, in my opinion, you would need some to rise to the next level. And somehow you're going to need more than a 2-day or 3-day conference to say that you have that kind of experience. You're going to have to develop, or like I said, insert yourself into projects or get yourself moved to another position that has that kind of responsibility, or get, some of the accountants moved under you. I mean, there are a lot of ways of moving the chess pieces here, or the checkers, but you have to, again, my fundamental point is you have to manage your career. And if you see these kinds of gaps, then develop a plan and start taking actions toward that plan. And we are going to talk about that here in a second as we finish up. All right, so you've done a self-assessment on your technical skills. Now you need to do an assessment on your non-technical and leadership skills. When you started, when every tax person starts as an entry-level tax individual at a company or a law firm or an accounting firm, the number one thing that everybody looked at for many years were your technical skills. And never forget those. I've had people who, get to the higher levels and say, well, I don't need to have those technical skills. Never, ever forget your technical skills. That's so important. And you need to maintain them. As you get higher, of course, it's more difficult and you can't possibly know everything, but at least know enough about the area so that when your experts are talking to you about it, you can understand them. But as you have risen in your careers, and all of you know this, the non-technical and leadership skills have become just as important, if not more important, at this point in your careers. And I've just mentioned a few, or identified a few of them on this slide. I'm not going to go through them in detail. Integrity, clearly, you know, if you don't have it, then in my opinion, you would not qualify as a number one. Credibility, you know, be real careful here. We talked a little bit earlier. If everybody's going to make mistakes. You are going to make mistakes. Your people are going to make mistakes. Your department is going to make mistakes. So understand that and learn from them and move on, accept responsibility for those mistakes. But if you're constantly making mistakes, you will undermine your credibility. And then, and I'm not only talking about you, but your department. If your department is, and you are giving bad advice to your internal clients. You're leading the company down paths that cost the company money or time, or detract from adding value, others adding value. Your credibility is going to suffer, and that's going to be a problem. Results are really important. Over my career, I've counseled people, and they say, what can I do to do this? Or I want to move over here. My first advice to them is, first, do your job. Do the current job that you have, because results in your current job and in prior jobs will trump everything else, except for things like integrity or credibility. But you have to do the job. Take care of business, as Elvis Presley used to say. Sense of urgency, ability to relate to others, ability to communicate at all levels. And we touched on this before. Tax people a lot of times joke amongst themselves. We're tax geeks. We can't communicate well. We just know that. At a number one and number two level, folks, you need to be communicating, and you need to be communicating well. And you need to be communicating well with a lot of people, from the board to entry-level people, in all kinds of modes. This is one of those areas. Some areas you can't fix. Some areas, if you don't have the talent, you may not be able to develop it. This is one you can fix. And if you're weak on this, by all means, strengthen this. List it as a weakness and take all actions that you need to strengthen it. Okay, demonstrated ability to lead, willingness to accept responsibility, customer service, and effectiveness in developing people, including, as Adam said earlier, including your successor. Very important there. All right, let's move on to the next one. Adam.
Actually, Nicole just posted a question. I think she meant for it to come to just me, but she put it, it defaults to everyone, Nicole, so you'll know it's yours.
Yeah, no, that's fine. That's fine. I was trying to get it in and not interrupt.
No, that's good. Go ahead. Do you want to verbalize that real quick?
Yes. This is Nicole Busey. So your first bullet there about do your current job, current past performance trumps all else. Are you saying that it's your track record? Is that another way of saying it? It's your track record, and that's the key in being proven there? Yes,
it is, Nicole. That's exactly what I mean. I just think it's not only your track record from the past. I mean, look, if you have 20 years of experience with a company and you're number two, and you want to move to a number one, and way back, 15 years ago, you had a bad performance evaluation for whatever reason, and that can happen, of course. That's not necessarily fatal. But if your track record is that on a scale of, let's say, 1 to 5, with 5 being the highest, your performance evaluations are 2. Number one, first of all, I would be surprised that you're a number 2. Second, I just don't think that stands, that puts you in good stead in terms of being promoted to the next level. And the third thing I'd say there is, even those times which have not been evaluated, such as your current, performance in your current job, that's really important. Because if you're bucking to become a number one and your CFO is really unhappy with what you or your department is doing this year, your group is doing right now, even though it's not reflected in a performance evaluation, your CFO has a lot of influence on who gets that number one position, and it's not going to help you. So you can't ignore what you're currently doing. Does that help?
Yes. Thank you.
Had another question come in real quick, Mike, on 360 feedback from direct reports and whether or not you think it's recommended in the overall assessment.
Yeah, that's, I have mixed feelings, honestly, on 360 feedback. You know, somebody told me a long time ago, your boss cannot be your friend. That's not always true. But look, I mean, you know, sometimes your boss just has to stand up and say, we're not doing it that way. Or we're not, you know, we're going to make these changes. You may not like it, but we're going to do it. And so if you have that in your direct report or reports, don't like something like that you've done or a reorg or whatever, you're going to get negative feedback. You know, so you have to take direct or 360 feedback, I think, in a lot of cases with a grain of salt. I mean, they can be helpful. They can be helpful because the direct reports may feel a little freer to you know, state something that they might not otherwise in a one-on-one conversation with you. But you know, it's tough. I would not put a lot of stake in that. I'm not sure I would put that up there as one of my top priorities. Some of you may have a different opinion. If you do, please voice it here.
What I've recommended, this is Tony, Mike.
Yeah.
Just real quick, what I've recommended to my clients on feedback sessions is while you're doing your personal career assessment discussions, and I try to have my clients do these at least twice a year, some 4 times a year if they're in some sense of turmoil, but more than once a year, sit down with each of their key direct reports and have a career assessment conversation about where their goals and objectives, where do they want to go, what gaps. This kind of assessment you're talking about doing self-wise, I teach my clients to do that with their own people. And during that session, flip it around and ask them to say, what can I do differently to help you? What do I need to do to help you get there that I'm not doing? And that will give you the pulse of what you want.
That's a great idea. You know, and I would go even further than that, Tony. I would not recommend that it just be once or twice or 3 times a year. You got to be doing this on a daily basis, really, with your direct reports. I mean, when I was head of FedEx, I used to tell my direct reports that I trusted every one of them. Those who I didn't trust didn't last very long, but I trusted them. I liked them. And we were generally aligned on stuff. And so we talked a lot, and we had, you know, there were times we had very serious disagreements about things. But if we did, then they knew where I was coming from, and I knew where they were coming from. And sometimes they won, sometimes I won. But it's a day-to-day kind of interaction, as opposed to, you know, pulling out a big surprise 6 months into the year and saying, you know, let's have this meeting on where you're going.
I agree.
Okay, so we are running up against the time limit here, so let me just very quickly say, all right, once you've gone through all this, assess your strengths and gaps from 2 perspectives, within your current company and externally. I'm not advocating that everybody be looking externally, but I am advocating that, again, you have to manage your career. And even if you are clearly the anointed person to replace the number 1 or to move up, be promoted out of the number 1 position somewhere else, you're clearly that's clearly going to happen. You know what? Stuff happens. And stuff happens that you can't control. And if stuff happens and all of a sudden that vision disappears for whatever reason, could be, you know, 1,000 different reasons. A lot of times it's good to have a backup plan, and that backup plan may mean external. I mean, you know, what can happen is if you have your sights set on the number 1 position, and you know you're the anointed individual, and then stuff happens and you don't get it, then all of a sudden you're not motivated. You know, you might become disgruntled, and that can lead to careers taking a nosedive. You don't want that to happen. So, you know, manage your career, and you may have to bite the bullet and say, I love this company. I love where I am. I don't want to move. But if you know, a number 1 position is a top priority of mine, maybe I have to. So keep that in mind. Put your personal assessment in writing. Okay. I know you all have a lot to do, And the last thing in the world you want to do is, take another hour of time tonight or sometime here in the near future and sit down and put some of this stuff in writing. But I will tell you, if you don't, you will keep it in the back of your mind, and you've got so much stuff going on right now. You all know you do. And if you don't put this in writing, you're going to look in 6 weeks, 6 months, you're going to look and you say, oh, I remember that was one of my gaps. I wanted to do something to cover that gap, and I haven't done anything. And the next thing you know, it's a year or 2 years, and one of your competitors, the number one position comes open, and your competitor has gotten it, simply because you did not stay on top of a plan. It helps you if you put it in writing. It's only for you. It's not for anybody else. Pull it out every once in a while and say, yeah, I covered that gap, or I've done this, or whatever. And based on that written assessment, develop a plan to help you be successful as a current number one or get to the number one position. Again, do your current job. Identify what specific actions do you need to take. What are those gaps that you have that we talked about earlier, and how are you going to bridge those gaps? Do you need a marketing plan? Do you need to market yourself to other people? Who do you need to talk with, and who do you need to get help from, and how? Sometimes it's not your boss. Sometimes it could be others who are maybe at a level equivalent to your boss. That, somebody in operations that you guys did a bang up job on with a reorg or something, you became good friends with her. Maybe you're good enough friends to say, hey, I need some help. Here's where my goals are. Can you help me get there? What is your advice? Or can you even talk to my boss? Blah, blah, blah. Just think about stuff like that. The timing obviously is critical. If the number one position is going to come open in a year, that's a very different situation and plan that you're going to have than vis-a-vis something that's coming open in 5 years. And what are your backup plans? And finally, let's go on to the next slide. Execute. Don't forget, your career is your responsibility. There is a fine line between pushing too hard and not hard enough, but you're going to have to gauge where that line is. Talk to the right people and remind them that your development, your promotion could be a benefit to them as well. I think we're right on time, and I'll throw it back over to you.
I was going to say, we've got 2 minutes left, Mike. That's a good job on the timing. Are there any questions? Does anybody have anything they'd like to bounce off of Mike here before we break? If you guys have any questions that you do want to get answered, we are going to have you guys have access to a forum where you can post questions. Mike will be able to get those if for whatever reason, because of Mike being in the mountains, he can't get access to the forum via the internet. We'll get the questions to Mike and make sure we get an answer to you. And we will certainly stay on here till all the questions are answered, even though we're right up against the time frame. So you guys don't be shy. If you have anything else, you can chat them into me or speak up here. We'll also get a recording of this to everybody. So if there's anybody else on your team that you're developing that you think would benefit from hearing about this, particularly the managing your own career aspect of this or any of those things, you can pass it along as well. We did have a question come in from Kelly, and it had to deal with non-U.S. tax people. Kelly, do you want to go over that?
Yeah, thank you, Adam. What I was wondering was, when is it the right time to consider hiring a non-U.S. local tax expert? At what point, similar to some of the other discussions earlier on the call, we talked about how we have financial people in these non-U.S. jurisdictions and how they can, assist and lead in certain calculations and also liaison with outside firms. An area where I'm trying to focus my time and consider, next steps and growth and investment is there, and I'm trying to gauge whether there are barometers to this.
Yeah, Kelly, the way I actually had this issue multiple times in my career, particularly at TRW and at FedEx, where we had to make a decision whether we were going to, in some cases, start up a new office or add to those offices. I'll give you my fundamental response to that is it's a cost-benefit analysis. And if you have, and of course, risk-weighted cost-benefit analysis. If you have a lot of risk and you're relying on people, external service providers, who don't understand your company very well and who don't understand, who could get you into trouble, you know, that's certainly a risk that you have to take into consideration. If you have a lot of work that has to be done and you're paying these external providers a lot of money to do that work, then that's another thing. You know, that's a cost. Whereas if you have your own person bring him or her in, you could reduce those costs, and you're going to have to sell it to, in our case, I mean, we had to sell it not only to my CFO, but also to whatever operating region that person was going to be in. But that's the way I always looked at it, primarily a risk-weighted cost-benefit type of analysis.
Okay, thank you for that.
Anybody else have anything they want to ask here? We'll keep things going here until everybody gets their questions answered.
Let me add one thing to that, Adam. Another thing you have to think about there, Kelly, is also whether you want to use an expat as opposed to a local. And an expat in some cases may be the better answer. You know, but it's usually more expensive too. So just something else to think about there.
Okay, thank you very much.
Okay.
I haven't seen any other chats come in or anybody else chime in with questions. Again, we'll get you guys a link to the forum. So if new things come up, we will. You'll have a chance to post that on the forum, and we'll get you an answer to those. Thank you guys for carving out the time and listening in today. We'll be talking to you next month. Mike will be going over taking this same assessment now and applying it to your department and doing a departmental assessment. He's got some interesting things there to share. So until then, we'll talk to you guys soon.
Can I add one thing, Adam? If you guys have any suggestions on how we can make this better, or in particular me, how I could make it better, please let me know. Let us know. Or if there are things you want to hear in the next session. Okay?
Absolutely. You guys will be getting a copy of the PowerPoint ahead of time. All of your relationship managers will also be reaching out to you to go over any questions in the event that you can attend. So we make sure those get addressed during the call. So that's where some of my questions that I listed came from. And Kelly, I just saw you you asked me about Mike's email address. It should be on the list, but if not, I'll double check it when we hang up. I will get it to you.
Well, let me just tell them it's very easy. It's mfryt, F-R-Y-T @hotmail.com.
Got it. Thank you, Mike.
You're welcome. Thank you all for participating today. I hope you found it to be of value.
I thought it was great.
Thank
I've
you.
gotten comments already.
Okay.
Thanks, guys.
Terrific.
Thanks.
All right. See ya.
Thank you. Bye.
Bye.
Bye-bye.